But when we break down, do you think we break down before Jerome Powell, or do you think we make that push up to maybe 24,000, maybe even getting above 25,000, and then Jerome Powell comes out and speaks a week from today and floods the market, and we go down to those 19.6 levels?
I think that how we've held since FTX's collapse, and then this is what I mean by that. FTX collapsed, and there's been so much of the market shaken out so far that Genesis filing bankruptcy didn't affect the market.
Right.
The market was prepared for it. The sellers have left. I think what we need to watch out for now is in the small event of bad news, or for instance, if Jerome Powell comes out and there is a 50 basis point hike,
Ooh.
I think that would cause quite a wave down. But I think what would happen, this is my speculation on that. If that were to happen, I think it's most likely that if they did that, they would also follow it up with their discussion later that afternoon with a dovish narrative. So they would send the market into a frenzy again, because they'd be very hawkish with their 50 basis points, but then they come out and then, be like, hey, okay, I think we're going to go very light from here on out. I think that is a possibility. I think it's unlikely. I think it's more likely we're going to get to 25 basis points hike. And although we're getting a hike, the market is so already, I'm sure you guys have looked at the metrics. It's like 98% or something of the people are betting that we're going to get that 4.5 percentage interest rate, which would be the 25 basis points. So I think the market right now, those that are shakeable, that have, I think the market is intrinsically stronger than we want to believe it is. And I know T-Stream, you asked me about some metrics because I was in a car all the way here. I didn't get a chance to pull those up. And I don't have access to our shared Glassnode anymore. They terminated that, I believe. But you'll see when you look at long-term holder, when you look at the strength of long-term holders in the market and illiquid Bitcoin, meaning Bitcoin that is not stored on exchanges, or it's also being held by people that have proven to be longer-term holders. The long-term holder cohort in the market, meaning people that hold longer than 155 days, and in many cases, years, these are the people that make smart decisions in the market. They buy at lows and they hold usually through an entire cycle and sell in the next cycle's strength of the bull market. So we're right now, as low as we are, we have the metric is ridiculous. It's like somewhere in the near 70% of the market is held by long-term holders and coins that haven't moved in over a year. So regardless of this whole year, think about it, this whole last year has been a downtrend. So the majority of people that are holding right now have held through blood on the streets. And so now we're starting to see accumulation starting to come in, and the whales haven't even started to accumulate yet, but institutions and smart money and smaller cohorts, the 0.1, the 0.00, the 0.01 Bitcoin holders, people less than $40,000 worth of Bitcoin. This has all been skyrocketing. So it's interesting to see the retail come in before a lot of these big money players. So the argument is whether we are here and about to get rejected back down, or if we're here looking for confirmation. I honestly believe that we are somewhere in this region right here. I do think because there's so much bullish sentiment that has come in, there's so much bullish, I won't even call it sentiment, hopium that's come in. Okay, I'm on the 2 hour. Let's go back out to the daily or the 3-day. Let's remind ourselves that we are in this massive downtrend. And if this were to play out all the way to the end, these sticky tools bother me when they stay on, the drawing tool. So if this were to go all the way to the end, I'm going to find this. Typically patterns break out somewhere past the 66%, mark. And we're kind of not really near that. So the fact that we have to be realistic that there is a possibility that this does get rejected down, and we have a price point that finds somewhere down here in the $13,000 level.
Right.
I think if we did fall from here, I think that's kind of, I would say the 12 to 13,000. This is as low as I would think that we would go. I do think that this bullish sentiment I do think we're going to get something like that. I drew this out the other day. I think we're going to get something like this, maybe even test down a little bit, but having this huge interim market rally that goes up somewhere in the $38,000 to $45,000 range and gets rejected back down. And then in 2024 into 25, we'll have a massive rally, that takes us to that 3.618, which would be the same as this 3.618 would be the same as this right here. This is also the 3.618 where we found the high. So what I'm really looking at right now is this is just only showing for possibilities that could happen. But what everybody should be focused on is what is our strategy right here at this resistance line, and also what are the key fibs of all these levels on the way up, because all these are basically likely going to be sticking points, and you need to have a strategy in place so you don't either just capitulate out of the market, but you understand that we are going to have rejections and pullbacks along the way. And what's your strategy? What's your map on the way up?
There's a link in the description below for not only Kelly's YouTube channel, which is the BitLab Academy, where he goes live every morning at 10:30 a.m. Eastern Standard Time. His Twitter is there as well, and we didn't get to really get into that, but Kelly has some top-notch Twitter Spaces going on, I believe, every Thursday. So make sure you check out his Twitter page, check in for those Twitter Spaces. Kelly, thank you so much for coming on, man. We'll get you here very soon. And yeah, we would both love to come on your channel anytime you want us. So just
remember. The market is a lot like chocolate milk.
Hey.
Shake well.